So, your malpractice insurance policy is coming up for renewal, but for some reason, the price is much higher this year than it was last year. Why is that? Did something change? Today, we're going to talk about the 3 reasons why your malpractice premium may have gone up. We'll dig into the specifics of each case so that you can figure out what factors are in your control and which ones are not. And by the end of this episode, you'll be more comfortable each time your policy comes up for renewal and able to manage your malpractice coverage like a pro. Welcome to Malpractice Insights, the show dedicated to helping healthcare professionals understand medical malpractice insurance and providing you with the solutions you need so that you can get back to the work of practicing good medicine. My name is Jennifer Wiggins, CEO of Aegis Malpractice Solutions, and I'm so glad you've joined us today. All right, let's jump in. There are 3 main reasons why a doctor's malpractice insurance premium may go up at renewal. Those reasons are, number 1, the claims made step increase. Number 2, changes to your credit structure. And number 3, carrier rate changes. So let's unpack each of these, starting with the first one, the claims made step increase. Claims made malpractice insurance triggers based on when the claim is made against the provider. For this reason, when a doctor buys a claims-made policy, the first year that he carries the insurance, the rate is very low. And the reason for this is because it's less likely that you'll have an incident and have a claim filed against you in the first calendar year that you have your policy. But the longer you're in practice, the more the risk increases. So claims-made insurance rates will go up each year for approximately 5 years until your policy reaches the mature rate. After 5 years, your price should remain stable. So how do you figure out if your rate change is due to a claims-made step increase? Answer: you need to find your retroactive date. Your retroactive date is the date that your insurance policy covers you back to. You can find it on your certificate of insurance or your policy declaration page. A retroactive date starts off at the inception date of the original claims-made policy. So, if a doctor buys a claims-made malpractice insurance policy for the very first time on July 1st, 2022, then the retroactive date for that insurance policy will be July 1st, 2022. As the doctor renews that policy year over year, the retroactive date stays the same, even though the policy is moving forward. So, at the next renewal, the new coverage period would be July 1st, 2023 to July 1st, 2024, with a retroactive date of July 1st, 2022. At the next renewal, the coverage period will be July 1st, 2024 to July 1st, 2025. The retroactive date will still be July 1st, 2022. As your policy continues to renew year after year, your premium continues to move up step by step until it reaches the mature price, which again typically happens after 5 years. So, if your retroactive date is within 5 years of your current renewal date, then your rate increase is likely due to the natural step progression of the claims-made policy. Okay, moving on to our second reason why your premium may have gone up. Now let's talk about changes to your credit structure. When an underwriter prices your policy for the very first time, they're looking at a variety of factors to determine what your rate should be. For example, they're considering your specialty, the city and state where you're working, what kind of policy you want, and how much coverage you need. Once they have calculated your base rate, then they can start applying credits or debits due to additional risk factors that are unique to your practice. The most common credits that doctors receive on their malpractice premiums are part-time credits, loss-free or claim-free credits, risk management credits, and new to practice credits. So, if you're working part-time, you'll get the appropriate premium discounts based on the number of hours that you're going to be working. If you've been in practice for several years and you've never had a claim or a loss against you, then you'll likely get a discount for that as well. Doctors can also earn discounts on their premiums if they complete a risk management course with their carrier, and doctors who are brand new to the practice of medicine or who are just finishing up their residency or fellowship training also get significant discounts on their rates when they're just getting started. So, how do you know if your rate increase is due to changes in your credit structure? You need to consider if any of these things have changed in the last year. Have your hours gone up? Have you experienced a claim or had a loss payment or settlement? Have you taken a risk management course since your last renewal? Have you recently finished training and are you now a few more years into your practice? Your malpractice carrier or agent should tell you if any of your credits have changed, but in case they don't, take a look at these items to see if there may be a logical reason why your premium is different than it was last year. Okay, so we've talked about the claims made step increase, changes to your credits, and now we are at number 3 on our list of why your premium may have gone up, and that is that the carrier has simply changed their rates. Malpractice insurance carriers are constantly reviewing their rates to make sure they are adequately funded to cover you in the event of a loss. Actuaries are regularly reviewing claim trends, actual claim results, and market fluctuations. And when necessary, they may make suggestions to modify pricing. When a carrier makes a rate change, they typically do so based on a class of business or a certain geographic area. For example, if Acme Insurance Company is experiencing higher than normal claim activity in Miami, Florida, then they might consider raising the rates in that area to accommodate for the increased risk. Or if claims are trending negatively with a certain specialty, such as, let's say, emergency medicine. Maybe frequency has gone up, or maybe there have just been a bunch of nuclear verdicts within that specialty. In that case, the carrier may consider adjusting their rate for emergency medicine providers as a whole. Sometimes carriers will spread a rate increase over their entire book so that one specific group doesn't get hit as hard. So instead of raising the rates for emergency medicine by 15%, they may choose to increase everyone's rate by 3% so that the overall impact is less. It's important that malpractice insurance carriers charge consistent, fair rates so that their reserves are adequately funded and major rate changes are less likely to occur. It's in your best interest as a healthcare provider to choose a carrier that has a history of stable rates, instead of picking a carrier who may foolishly underprice and then take a major rate increase later on. Or worse yet, they could just go out of business altogether. So, how do you figure out if your premium increase is due to a carrier rate change? If nothing else has changed in your practice, and you're not in the first 5 years of your claims made step progression, then your rate change may be due to a carrier rate increase. When your malpractice insurance policy comes up for renewal each year, you should be getting some sort of communication from either the carrier directly or from your agent, advising you of your price and any other noteworthy items for the upcoming year. If you notice a significant change in your premium and it's not explained in your renewal documents, contact your agent or carrier to get more information on why. If you have any questions on this topic or you want to make sure that you're covered appropriately, click the link in the description box below where you can connect with us via phone, email, or chat today. And if you're listening, please visit us online at aegismalpractice.com. That's AEGIS malpractice.com. And don't forget to please give us a like and leave a review. Your feedback and support really does help us to reach more people, and we're grateful for your clicks and your kind words. This is Jennifer Wiggins. Thanks for joining us.